gatekeeper. His appointment could draw the ire of U.S. President Donald Trump, who has said he should have a role in the choice of the next leader, a demand Iran has roundly rejected. On Sunday, Trump told ABC News, quote, "If he doesn't get approval from us, he's not going to last long." Israel, ahead of the announcement, threatened to target whoever was chosen. Fighting has escalated in the more than week-long U.S.-Israeli campaign against Iran. Israel expanded its strikes on Iran to include fuel depots, and Bahrain blamed Iran for a strike on a desalination plant. Trump has pressed for an unconditional surrender, but Iran's parliament speaker said Tehran was not seeking a ceasefire and would punish aggressors. Israeli Prime Minister Benjamin Netanyahu said his government would press on with the assault and strike Iran's rulers, quote, "without mercy." Trump told reporters on Air Force One over the weekend that he was not seeking negotiations to end the conflict, which has driven up global energy prices, disrupted business, and snarled air travel. At some point, Trump said, "I don't think there will be anybody left maybe to say, 'We surrender.'"
And it seems that the worst-case scenario panned out by analysts is playing out right here on oil prices. Now, global oil prices are nearing the $120 mark for the first time since 2022 as fears grow that the conflict could disrupt shipments through the Strait of Hormuz. Now, U.S. benchmark WTI, or the West Texas Intermediate, jumped nearly 30% to about $117 a barrel India early morning today. Now, the global Brent crude benchmark also surged to more than $110 a barrel. The spike comes as investors worry that the war could choke off energy flows through the narrow waterway that carries roughly 20% or a fifth of the world's oil supply and as much as about 60% of India's total oil supply. Now, meanwhile, U.S. President Donald Trump dismisses the surge on Truth Social, calling it a small price to pay for eliminating what he described as a threat from Iran's nuclear program. And it's not the first time that we are seeing this sort of a spike in global oil prices. In fact, over the past 2 decades, oil prices have swung sharply, driven by wars, sanctions, economic crisis, and even a global pandemic. The most dramatic spike came back in 2008 when crude prices surged to an all-time record of nearly $147 a barrel. The strong global demand, particularly from China, shrinking U.S. inventories, geopolitical tensions in key oil-producing regions, and a weaker dollar all pushed prices to historic highs. However, the rally collapsed quickly as a global financial crisis triggered a severe economic slowdown, sending crude crashing to nearly $36 a barrel by the end of that year. Now, just a few years later, in 2011, unrest across West Asia and North Africa during the Arab Spring sent prices soaring yet again. Political upheaval in oil-producing countries such as Libya added to fears of supply disruption, pushing Brent crude to around $127 a barrel. Next year, 2012, crude prices climbed back to above $100 a barrel after Western nations imposed sweeping sanctions on Iran over its nuclear program. Now, continued tensions in West Asia kept oil trading above that level for nearly 2 years before a surge in U.S. shale production flooded the market and pushed prices sharply lower. Now, perhaps the most extraordinary moment in oil market history came in 2020 during the COVID-19 pandemic as lockdowns grounded flights, halted industries, and crushed global demand. Oil storage facilities quickly filled up. In an unprecedented event, WTI crude futures plunged to minus $40 a barrel, meaning producers actually paid buyers to take oil off their hands. Oil prices rebounded strongly 2 years later. In 2022, Russia's invasion of Ukraine triggered fears of a major supply shock after Western countries imposed sanctions on one of the world's largest oil producers. Now, prices surged again, with Brent approaching $139 a barrel and WTI climbing above $130 a barrel. Now, with tensions escalating once again in West Asia following the U.S. strikes on Iran, crude prices have crossed the $110 mark yet again. In fact, WTI above $117, highlighting how geopolitical shocks continue to send ripples through the global energy market. So these are the major events which have triggered sharp rallies and sometimes sharp declines in oil prices. Some analysts are expecting that oil prices this time around, if this happens to be a long war, could continue to as much as $150 a barrel. In fact, that's the latest Goldman Sachs estimate which has come, which says that if the US, Iran, Israel conflict happens to be a prolonged one, oil prices could surge to a historic record high of $150 a barrel. But today, this morning, in fact, late night US time, early morning India time, oil prices are nearing the $120 a barrel. This is something which is likely to cast an ugly shadow, not just on markets as they open in just a few minutes from now, but also on India's inflation and India's overall economic growth. Remember, every $10 or so of spike in global crude prices pushes the economy down by about, and the current pushes up the current account deficit by about 25 basis points or so. We've seen prices almost double in the last 1 year. Remember, just before the outbreak of the war in Iran, oil was trading at about $65 a barrel. This morning at about $117 a barrel, indicating almost an 80% jump in crude prices in just the last 2 weeks alone. These tensions are not likely to simmer anytime soon, but what is this likely to mean for the Indian economy, for Indian markets? Let's get a perspective on that. We have Dr. Lavish Bhandari, President and Senior Fellow at CSEP, joining us this morning. Dr. Bhandari, as always, pleasure having you here with us. Just help us understand, if this oil shock were to continue, can India sustain the levels that we are seeing right now, already in excess of about $115 a barrel, likelihood of touching $120 a barrel today, and the latest Goldman Sachs estimate suggests that $150 a barrel could be coming soon. Can India sustain this price?
See, first, this is not going to be a very long-term kind of a surge. Even if it touches a higher level, it's only temporary. The war cannot continue for too long. It's just not possible either with the United States or from Iran. Having said that, of course, high energy prices are always a big problem, in the sense that they percolate through the economy. They have an impact on food prices and, of course, on just about every aspect of the economy. So this will be a significant hit, but it's only very short term. There's enough depth in the Indian economy to be able to take it on. And, of course, government finances are also fairly tight right now. So I don't see this to be it's a problem, no doubt, but it's not a very serious problem.
Serious problem, but some estimates suggesting that India has got supplies of about 25 days or so. With the window to import Russian oil now opening, we have another 30 days or so to increase our stockpile of oil. Now, let's presume for a moment that this does happen to be a long-term war, and some analysts are expecting that this could be potentially, 6-month or long conflict. If that were to happen, how long before India's stockpile exhausts itself?
So the stockpiles, by the way, will never be exhausted.
Okay.
They are there to use as and when, but only in limited quantities.
All right.
What will happen is that our cost of petroleum or oil is going to rise up, whether it's from Russia or from anywhere else in the world.
Okay.
So what's going to happen is we are going to look for other sources, and generally you will find that there will be an increase in oil prices.
Okay.
Having said that, it is a month's this thing, and of course greater leeway from Russia is more than adequate, I think, to be able to address at least the immediate hurdles for the next 3-4 months. I don't see this to be such a serious problem in the short term.
Okay. And what about worries of India importing inflation? Is this something which could cast an ugly shadow on India's growth ambitions if inflation, by account of higher oil prices, is likely to come to India's shores?
Yes. So that is a problem. This will, to some extent, be inflationary. And as I said, that if it continues for long, that's when the problems ramp up. But I do not really expect it to be a long-term thing. But having said that, yes, this is an inflationary, these are inflationary times and coming in from global pressures.
All right. And what is the kind of impact it is likely, in your opinion, sir, to have on India's GDP growth? Because oil prices, inflation, and of course the current account deficit widening on account of higher fuel prices. Overall, how does this bode for India's GDP, let's say, for the next financial year?
So, I mean, we will have to have a wait and watch. This is an unexpected surge in prices, so they will have an impact of some type. Whether it is a very large one or a small or a short one will, of course, depend upon how long this war continues, and of course how much these prices ramp up by. So, having said that, I do not really expect the overall growth momentum to be impacted. It's just going to be, even in the growth, if there is a blip, it's going to be temporary. This is not a long-term problem for India.
All right. Is this a wake-up call, sir, for India to diversify its own energy sources, and not just energy sources by way of which countries you import from, but our own sustainable energy transition? Is this the trigger really to go ahead and double down on creating infrastructure and creating those pipelines to ensure that our dependence on global players for energy comes down?
Absolutely. And I'm glad you asked this question, because this is high time. We had a strategy to move away from petroleum for the next 5 to 10 years. The advantages are too many. They are on the economy side, on the environment side, on health side, because of pollution. So this is something which the Indian government needs to have right on the top of its agenda. And hopefully it is a wake-up call for everyone.
Right, Dr. Bhandari, let's leave it at that. Thank you so much for your time, sir, and for joining us here early morning on the Morning Brief at 9. Thank you so much. As always, pleasure having you. And US President Donald Trump said the Iran conflict could continue until Tehran no longer has a functioning military or leadership in power. Trump also raised the possibility of sending US ground troops into Iran if there was what he called a very good reason to do so. Trump added that he is not currently interested in negotiating with Tehran, rather suggesting the ongoing air campaign could eventually make diplomacy irrelevant if Iran's military capabilities and leadership structure are eliminated.
What are the circumstances where you send in ground troops? How are you thinking about that? I don't even want to talk about it now. I mean, I don't think it's an appropriate question. You know, I'm not going to answer it. Could there be? Possibly, for very good reason. Have to be very good reason. And I would say if we ever did that, they would be so decimated that they wouldn't be able to fight at the ground level. Negotiating leverage, maybe maximum, but we're not looking to settle. They'd like to settle. We're not looking to settle. Third or fourth level of leadership. And they have leaders right now that nobody even knows who they are. They're being decimated now. You know, at some point, I don't think there'll be anybody left maybe to say, we surrender. But they're being decimated.
Meanwhile, Britain and the United States are trying to steady relations as tensions grow over the Iran war. British Prime Minister Keir Starmer held telephonic talks with US President Donald Trump on Sunday about military cooperation. The US President has repeatedly criticized UK's stance after London initially blocked US use of British bases for the first strikes on Iran. Trump even suggested the decision had helped damage the two countries' historically close ties.
US President Donald Trump has dismissed Britain's consideration of sending aircraft carriers to the Middle East, saying the United States does not need them to win the war with Iran.
We don't need them. It's not the right time. It would have been nice to have had them 2 weeks ago.
Trump was speaking to reporters aboard Air Force One after Britain's Defence Ministry said on Saturday it was preparing the Prince of Wales aircraft carrier for possible deployment. But no final decision had been taken about whether to send it to the Middle East, a British official said. In response, Trump posted on social media that he, quote, will remember the lack of British support during the conflict with Iran. The president has repeatedly criticised Britain's Prime Minister Keir Starmer over his stance on the war. He suggested this week that Starmer helped ruin the country's historically close ties after London blocked initial US use of British bases to attack Iran. Starmer has defended that decision, saying he needed to be satisfied that any military action was legal and well planned. He later granted US forces permission to use British bases for what he called limited and defensive strikes to weaken Tehran's capabilities. On Sunday, Starmer's office said the pair had spoken on Iran as 2 US Air Force planes arrived at an airbase in England. The Prime Minister's office released a statement saying the use of Royal Air Force bases was discussed, quote, in support of the collective self-defense of partners in the region. Starmer's office did not address Trump's criticisms, but said the Prime Minister offered his condolences over the deaths of 6 US soldiers killed in the conflict.
All right, we'll come back to the global ramifications. But meanwhile, the Indian stock markets have opened better than Asian peers, but as expected, deeply in the red this morning. In fact, Sensex and Nifty up both down almost 3% or so in trade expectedly this morning, all on account of fears rising and mounting on account of increased oil prices, especially with the conflict in West Asia. In fact, Nifty 50 this morning well below the 23,800 levels, also at about 23,795 as markets open, and the opening bell rang at 9:15 a.m. Meanwhile, Sensex now below the 77,000 levels, down to about 76,742. Likely pain, but smaller magnitude of pain even in the mid-cap and the small-cap space. Both indices are down about 2% or so. Meanwhile, volatility is inching up again with the India Wix at about 20-odd levels. It looks like the cuts are likely to continue for some time. And if you pull up the Nifty 50 heat map, you'll see that pretty much the entire index, barring just 2 stocks, are in the red this morning. In fact, on the Nifty 50 alone, the advance to decline ratio is about 48:2. Reliance Industries not taking as much of a beating as it potentially should have, with the rising oil prices, down about 0.9% or so. The only 2 indices, which are the only 2 stocks, in fact, which are in the green this morning, happen to be ONGC and Coal India. Of course, rising expectations that any surge in West Asian-driven oil prices is likely to bode well for oil producers in the country. So ONGC, Coal India in the green. Barring that, every other stock on the Nifty 50 heat map in the red this morning. Big pain coming for the banking and financial services industry, and also for consumer durables. In fact, Maruti Suzuki is down almost 5% or so in trade. L&T is down more than 5% or so. And it seems that even Jio Financial Services is down almost 5%. So the biggest 3 losers in the stock market this morning as markets open on the Nifty 50 happen to be Maruti Suzuki and Jio Financial Services, as well as L&T. So we'll, of course, bring you an update on this with Rohit Srivastav, who will be joining us on the other side of the break. We'll be back very, very shortly. Keep watching News 9.
इन्होंने हेल्थ इंश्योरेंस नहीं लिया और हॉस्पिटल्स के लाखों के बिल चुकाने में अपनी सारी सेविंग्स गवा दी। और इन्होंने पॉलिसी बाजार से हेल्थ इंश्योरेंस लिया, जेब से एक भी पैसा खर्च नहीं हुआ, और पॉलिसी बाजार ने कैशलेस क्लेम दिलवाने में इनको पूरा सपोर्ट किया। तो रिस्क मत लो, पॉलिसी बाजार से 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 525 रुपए महीने से शुरू।
Volkswagen. इस खेल में खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers. साथ खड़ा है। We are the Tigers. गेम बड़ा है, dribble like a rap, pass, 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 setting up the track, kick it hard in the ball, chuck there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
We're going to explore the unknown sides and destinations of Spain.
Welcome back. You're watching News 9. This is Morning Brief at 9. Time now to look at the stock markets in detail. Well, Indian markets have opened a little better than its Asian peers. And let's look at the charts for Asian markets this morning. In fact, Japan and South Korea both reeling under tremendous pressure at one point in the morning. The South Korean Kospi index was down almost 8%. It has recovered gradually since. But as we speak, Japan and South Korea reeling under tremendous pressure this morning. Both the benchmark indices of the two countries are down almost 7% or so in trade. In fact, the Nikkei 225 seems to be the worst hit, down about 6.98%, while South Korea's Kospi is down about 6.6% or so in trade. Similar sentiment seen, in fact, even on Taiwan's TAIEX index, which is down more than 5%. India pretty much mirroring what the Hang Seng is representing. Indian markets are also down about 2%, 2.7% or so in trade. Let's pull up the charts for the Indian markets and look at the Sensex and the Nifty. In fact, as we speak, Sensex and Nifty both down 3% or so. In fact, Sensex is down more than 3%, down to 76,540 odd levels. The Nifty 50 is also down almost 3% to about 23,729 odd levels. Volatility in the Indian markets has shot up by about 20% or so at about 24 levels. These are not numbers that we've seen in the recent past, while we are now seeing deeper cuts coming for India's small cap and mid cap space as well. Let's pull up the Nifty 50 heat map and try and see which are the stocks. In fact, it's a complete meltdown this morning. When markets opened, you had ONGC and Coal India in the green. Right now, even ONGC has slipped into red territory. Coal India being the only stock which is sort of, defying the trend this morning. Every other stock on the Nifty 50 heat map is deeply in the red. Reliance Industries not as badly hurt as some would have expected it to, with the rise in oil prices and with overall the disruptions that we are seeing from West Asia. There's a bigger shock, in fact, for India's BFSI sector as well as the consumer durable sector. You're seeing SBI is down about 5.5%. Maruti Suzuki is down about 5.5%. And you're also seeing deep cuts in L&T, which is down about 4.6% or so in trade this morning. Let's just put all of this into perspective with Rohit Srivastava, founder and market strategist, IndiaCharts.com, who joins us this morning. Rohit, good morning. Well, not sure if you would call it a good morning looking at the charts this morning, but beyond the charts is the underlying slippery story of oil. And oil is now, in fact, crude is nearing the $120 a barrel. We saw WTI inch up to about $117 a barrel this morning. And a lot of disruptions further expected because oil is now at a 2-year high, with Qatar warning that overall production in Gulf could be hit. And of course, all this coming on the back of US continuing to bomb Tehran. In fact, it bombed Tehran's fuel depot, and Kuwait has also cut oil supply from the region and into the rest of the world. Meanwhile, there's a new sort of statement which has come from Goldman Sachs, which is saying that oil could hit as much as $150 a barrel if the Strait of Hormuz continues to remain shut. What are you making of the oil story? How slippery is it likely to be, not just for Indian markets, but for the Indian economy as a whole?
No, it's not good news, for sure. The strategies we've had is to tell people to keep hedging. If you don't want to create cash on your portfolio, you would have hedged with, long-dated put options. That was the strategy that we took. But what happens here, if oil prices remain elevated, is that you do see a slowing down of economic activity. And it's not just about high oil prices, it's also about the supply of oil that goes into so many industries. And if that supply runs out and is not filled, then you can't produce the same as you were doing before. What also happens in an economic war environment that becomes prolonged is that a lot of plans get shelved or get postponed. So if you have capex plans, you're probably going to say, okay, let me not invest this now. Let me wait a little longer and then start out to play out my investment themes. And that itself causes a slowing of growth, not just in India, but also at a global level. So we start looking at a slowing global economy. And that is what I think markets are starting to price in today, because we are going from saying that this was going to be a 1 week or a 4-day war to saying that it's going to be 3 to 4 weeks and who knows longer. And that's the fear that I think has started to hit markets on Friday and even more strongly today.
Talk to us specifically about oil marketing companies, because these stocks are taking a massive beating in trade this morning. In fact, BPCL is down about 7.5%. Hindustan Petroleum is down more than 7%. IOCL is down about 6.5% or so. Overall, are there fears now of the sticker shock also to come in? Are we likely to see retail prices of petrol and diesel also to come in? I understand that this is, of course, also the time when there are two states which are going into elections, so the government will want to be very, very careful about not letting, the sticker shock hit Indian consumers. But overall, with the action that we are seeing in West Asia, and I'm looking at stocks of BPCL, HPCL and IOCL, is there a likelihood of a sticker shock for Indian consumers?
I don't think so. Historically, the way we've managed this used to be through something known as an oil pool account.
Yeah.
Definitely, the government hasn't desired to go back to that, so it was done away with.
Yeah.
But it really works in situations like this where you want to protect the companies involved, at the same time not change market prices. So the government used to take the hit through the oil pool and allow the oil marketing companies to remain profitable. So that was the solution of pre-2000, 2005. Now, in the current environment, the oil marketing companies would take a hit because prices can't be raised, and the government would not allow them to go up too much and create chaos. Maybe they provide some temporary relief. So we can't rule out that you get a 10% or a 15% oil price hike at the pump, but that might not be sufficient to take care of the losses they'll face because of the jump in oil prices that we are seeing right now. So, but yeah, some adjustment, but I don't think it will be as as significant. 10-15% moving prices higher is a possibility that we should keep in mind.
Okay.
But would the government step in and provide relief through some kind of temporary tax cuts? That would help. Let's see if it really happens.
Right. So I think there are expectations that the windfall tax is finally going to be cut for, for oil marketing companies as well as oil refiners, oil producers. But our investor fears right now, looking at oil marketing companies, the fact that there may not be a sticker price increase in cost of petrol and diesel, and hence profitability is going to take a beating. Is that the single worry right now, that oil prices will continue to rise or will stabilize at higher levels, but that may not be passed on to consumers, and hence profitability will take a beating?
Definitely, that's the straightforward case, because we are not like the US where oil prices are directly linked and prices per gallon just move up based on the price of crude. In India, it's very much controlled. Even though we have a supposed free market, the prices are set from time to time. And if they are not changed regularly, it ends up impacting the underlying companies. So that's a very straightforward equation.
All right. And surprisingly, Reliance Industries is down just about, 1/3 of a percentage point or so. One would have feared that refiners like Reliance are going to take a beating with higher import prices of crude oil. Is that not something that investors are worried about?
So I guess, there's it's slightly tricky. I'm not sure how to discount the Reliance case. Sometimes higher oil prices is not such a big issue if you're, passing it on, which is unlike the OMCs, right? You can pass on the price at a refining level and still maintain your margins, but that may not be possible for a oil marketing company. So that's probably why it's not taking a bigger hit. But eventually, if markets are weak, you might see pressure build generally just because of markets. But that's the differentiation between marketing and refining.
All right. Okay, I want to pivot away to other sort of, single-day shocks that the Indian stock markets have withstood over the last almost 2 decades or so, Rohit. And I really want to understand the learnings from that. So, back in 2020, 13% crash on March 23rd. This was the day that the lockdown was announced for the first time. We saw Nifty 50 tank about 13% or so. Then came, back in 2024, I beg your pardon. I think, we've got that date wrong over there. But back in 2024, we saw the general election result at, which took the stock market down, Nifty 50 down about 12.2% before it closed higher. Back in 2008, we saw the global financial crisis, the meltdown, which took Nifty 50 again down. It was trading at lower levels. It took it down to about 12.2% or so. And then we had the subprime crisis, the build-up of subprime crisis back again in 2008, which took the markets down to about almost 9%. And then we had, of course, the fear of the pandemic back in March 2020, when the Nifty 50 had climbed down about 8.3%. So we've seen pretty much in bad days, from those bloody Mondays to panic Thursdays and whatever not. We've seen Black Fridays. We've seen pretty much, oil prices, no, not oil prices specifically, but markets tank from a range of about 8% all the way to about 13% or so. So this 3% fall that we are seeing today, what does history tell us? That is this really something which one should panic about, or just weather it out? We know it's a temporary blip, and hence, what should the strategy of retail investors really be?
So yeah, it's a little late. Sometimes you feel, to start hedging or to start reducing risk on your portfolio. It's something we've been saying since January, that creates some cash and, be on the side for various other reasons. War was definitely not what we were citing. But if you put it together, if you mix up war with already a slowing economy and now the credit problems that are showing up in the private credit market for the US, and it all gets mixed up, then you have an overhang that can get troublesome, especially when you move towards risk aversion. Risk aversion is a situation where if global funds, which provide most of the liquidity out of the US or out of Japan, start withdrawing from global equities, and then it goes back into US bonds. So the way to judge that is if you see the dollar rising and you see US bond yields also coming down, which means bonds rising. When the dollar and bonds rise together, it sort of gives you a sense that funds have decided to become risk averse, and it creates a risk-off environment. And in that scenario, you can get those kind of bigger declines like the ones that you have actually highlighted, because then everybody would want to be selling and getting out of the market at the same time. And when would they do that is when they clearly sense that this is going to be a prolonged conflict. I think the sense of that has already come in. Right now, you don't have US markets open, but the future is already down 2%. If that accelerates through trade later in the evening, you would see a much more significant impact on both Asian and Indian equities, into tomorrow. So we need to be mentally prepared for that risk. If you're not, one way is to really look for hedges. I know we're already below 24,000. The last hedges we took on were 25,000 puts. Those have already more than doubled. So I don't know whether I can tell people to, look for 24,000 March, which is a very long duration. But at least for March, if you can, do some kind of hedges, that would actually help you. I don't mind really increasing cash levels in a portfolio to maybe 30% of more, because that then reduces the risk of a drawdown.
Okay.
Overall, say for example, you get a significant drawdown in your portfolio, it can be reduced by more than half by having a 30% cash level. So that's one way. You don't really necessarily need to sell out everything, but if you create some level of cash, it helps you bear the drawdown much better.
Okay, but how do you generate that cash right now? If this is the situation of the markets, what kind of sectors or what kind of funds should you sell to be able to build that cash position?
So there are many sectors which have actually done well even into last week. We just saw banking start selling off, So the weakest sectors of the last year were, of course, IT, realty. That's already done and dusted. So if you're still there, you're still in the weakest segments, but you might still be holding on to places like metals, which have done very, very well. There are still financials and banking stocks, which like PSU banks, for example, which have just started to fall from peak prices. So a lot of places where people can look at unwinding and, increasing cash if they've been exposed to those segments which have been doing well. Probably what you hold on to are defensive areas like pharmaceuticals, for example. Those have done well and are probably holding out better in the market. Defense stocks, simply because they relate directly with the war. And maybe, alternate sectors somewhere related to agro commodities. I specifically like sugar, because somewhere it has the sugar cycle or even the ethanol indirect demand, case based on high oil prices that can, make it attractive. So some of the segments that you can stick with, but on the other hand, many others which have done well is where you actually need to create cash, and you can create cash.
All right. And finally, what about foreign investors? Because you were talking some time back about looking at the US bond market and also about the strength of the US dollar. But this morning, again, the Indian rupee has opened weaker against the US dollar. It's again ahead of that 92 level. In fact, 92.2 against the US dollar is what we are picking up. Meanwhile, all of last week, foreign portfolio investors have pulled out as much as 21,000 crore rupees, or that's about $2.3 billion from the Indian equity market. So where does this sort of, leave the Indian stock market as far as its vulnerability is concerned to foreign money flowing in or flowing out of the country? Where do you see sort of, the FII money really going right now? And how much of a dent is that going to be for Indian retail investors if foreign inflows don't come back?
The foreign flows have not been positive for years. So when we look at it that way, it's been the domestic flows that have, helped the market. The problem really, therefore, would be when domestic flows slow down or domestic money starts withdrawing out of fear from these markets. That is what would cause a bigger reaction than just foreign investors selling. The foreign investor selling is having the most direct impact at the currency level. That is for sure. Because our currency is being funded by either foreign portfolio flows or FDI or remittances from the Middle East or various other regions where a lot of Indians reside. So these are the couple of sources from where our reserves have been built up over time. Because our current account deficit historically has been negative, even though we brought it down over the last 20 years from 4% to 1%, it's still a negative number, which means we import more than we actually export. And it is the other sources of funds that ends up, supporting the rupee. So if the other sources of funds dry up, it causes a currency concern. And that doesn't really help the, case for foreigners coming in. But the real reason why foreign investors haven't been investing for a long time, in my belief, has been the taxes that we put on them way back in, 2018 through long-term capital gains.
All right. Well, let's leave it at that this morning. Thank you so much, Rohit Srivastava, for joining us. Always a pleasure having you here with us on News9. And with that, we will slip into a very short break, but a lot more coming up as we continue with our coverage on the war in West Asia. A lot more after this short break. Keep watching News9.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
Someone to bring your vision into reality. When human vision meets artificial intelligence, storytelling enters new territory. 2 distinct categories: brand films, short films, evaluated by the best of the best, seen by those who shaped the industry, rewarded with a 10 lakh rupee prize pool, celebrated at What India Thinks Today, Delhi.
AI Squared Awards, where artificial intelligence meets artistic imagination.
It's confirmed. Iran's Supreme Leader Ayatollah Ali Khamenei has been eliminated. But it was just not about Khamenei. It was also about the entire regime which the Americans wanted to take out.
Are the Iranians going to carry out their pledges, and are they going to continue with their attack?
Though Trump had said that the waves of attack would continue, but a new signal has come that there might be a small pause.
IRGC is likely to adopt lesser radical and more pragmatic approach to basically buy time so that the regime can survive.
There is much more than what is visible or to the naked eye.
Khamenei was killed because uranium enrichment and the Iranian desire to make a bomb.
That expertise is there. People know how to enrich it. There are infrastructure which can again be rebuilt.
Iran today is headless. There is transition, but conclusion is far away.
Welcome Welcome back. You're watching News 9. This is Morning Brief at 9. Well, Israel has intensified airstrikes across Lebanon, targeting Hezbollah strongholds as tensions rise in the widening West Asia conflict. Now, Israeli officials say the strikes are aimed at dismantling the group's military infrastructure after Hezbollah launched attacks on Israeli territory. Take a look.
Beirut's Hezbollah-controlled southern suburbs stood in ruins on Saturday, as Israel warned Lebanon of a very heavy price if it failed to rein in the Iran-backed group. Lebanon was dragged into the wider Middle East war on Monday when Hezbollah fired at Israel, which responded with a new military campaign that forced hundreds of thousands of Lebanese from their homes. Israel pounded the group's strongholds across Lebanon with airstrikes, and overnight helicopters dropped troops in Lebanon's eastern Nabi Chit in a rare and deadly airborne raid. Resident Qassem al-Masawi said locals and troops clashed for about an hour. Hezbollah said in a statement that it had fired on Israeli troops dropped near Nabi Chit and that the troops had withdrawn. Israel's military said the operation sought the remains of Ron Arad, an Israeli Air Force navigator missing in Lebanon since 1986. Though no findings related to him were recovered and none of its forces were injured, it said. Addressing Lebanon's president, Joseph Aoun, in a televised statement on Saturday, Israeli Defense Minister Israel Katz said the whole country would suffer if the Lebanese government failed to enforce a 2024 agreement to disarm Hezbollah. If the choice is between protecting our civilians and our soldiers or protecting the state of Lebanon, we will choose the protection of our civilians and soldiers, Katz said. Hezbollah has told Israeli citizens living in communities near the border to flee their homes, though Katz said they should not. The United Nations warned on Saturday that the conflict was set to get even worse. Israeli strikes have killed more than 200 people across Lebanon, and orders to evacuate have displaced around 300,000 people.
And Israeli Prime Minister Benjamin Netanyahu issued a direct message to both the Iranian public and Iran's security forces on Sunday. In a televised statement, Netanyahu urged Iran's Revolutionary Guard operatives to lay down their weapons, saying they would not be harmed if they did so. The Israeli Prime Minister also said several countries targeted by Iranian attacks had reached out to Israel for support, adding that Tel Aviv stands in full solidarity with those nations as the conflict continues to widen. And on to disruptions in the skies now. Air travel between India and the Middle East or West Asia faced major disruptions on March 8th as escalating tensions in the region forced airlines to cancel hundreds of flights. According to the Civil Aviation Ministry, Indian Airlines cancelled a total of 279 international flights scheduled for March 8th due to the ongoing conflict. The situation has led to airspace closures and operational restrictions across parts of the Gulf, severely impacting flight routes and schedules. Now, the ministry said 49 flight operations were originally scheduled from West Asia to India by Indian carriers on Sunday. However, the rapidly evolving security situation forced airlines to cancel a large number of services as a precaution. Airport operations in major Indian cities were also affected. Officials confirmed that 66 flights were cancelled at Mumbai airport, including 34 departures and 32 arrivals. At Delhi's Indira Gandhi International Airport, operator DIAL warned that several westbound international flights may face delays or schedule changes because of geopolitical developments. Meanwhile, Air India has announced plans to operate 78 additional international flights between March 10th and March 18th to provide more travel options for passengers. The airline said the extra services will operate across 9 international routes connecting major destinations including New York, London, Frankfurt, Amsterdam, Zurich, Paris, Colombo and Malé. In a statement on Sunday, Air India said it will add capacity to 5 key European gateways and New York, along with additional flights to Maldives and Sri Lanka, in response to strong passenger demand during the current travel disruptions. The airline said the move will add over 17,600 seats across the 9 routes in both directions. Now, most of these flights will be operated using Boeing 787-8 aircraft, while Airbus A320neo planes will serve Malé and Colombo routes. Services to New York will be operated using Boeing 777-300ER aircraft, subject to regulatory approvals. Air India said the additional flights are aimed at ensuring reliable travel options amid the ongoing West Asia crisis. Meanwhile, Israel is beginning to reopen its skies after days of disruption caused by the war with Iran. Tel Aviv allowed outbound passenger flights to resume from the Ben Gurion airport on Sunday. Authorities say flights will depart from 8 a.m. local time, but initially each aircraft will be limited to about 70 passengers. Israel's airspace had been closed since Feb 28th when US and Israeli strikes on Iran triggered retaliatory missile attacks from Tehran. The closure left many Israelis stranded overseas, prompting the government to gradually restore operations at the country's main international gateway near Tel Aviv. Meanwhile, commercial airline pilots are facing growing dangers globally as wars and drone threats increasingly spill into civilian airspace. Airline pilots say the skies have become more unpredictable in recent years, with threats ranging from drone incursions to shrinking flight corridors caused by conflicts. Now, the latest US-Israeli strikes on Iran have added new risks, with missiles and attack drones now crossing airspace near some of the world's busiest airports.
From drone incursions to flight paths narrowed by conflict, airline pilots are facing escalating risks. The outbreak of war in the Middle East has put hundreds of ballistic missiles and attack drones into the skies and above some of the world's busiest airports. Iran has retaliated against US-Israeli attacks, and it's included hitting airports, grounding scores of flights from Dubai to Abu Dhabi. Reuters spoke to 8 pilots and several aviation and security insiders who said the accumulation of conflicts from Ukraine to Afghanistan to Israel has led to shrinking airspace and a wider use of military drones, taking a growing toll on pilots' mental health. Moritz Berger is a commercial pilot based in Germany. He recalled spotting an object that looked like a balloon with a structure underneath as he was about to land at a European airport.
It's really like looking out of the window and suddenly there appeared an object that passed by just below our aircraft, and we could see it for maybe 1, maximum 2 seconds. Normally when you encounter such a near miss or some object which is passing by, there's not enough time to react. So it is unrealistic to expect from pilots that they would fly around such an object. There's pretty much nothing we can do.
Industry experts say airspace safety has worsened in recent years. An Air France flight to bring stranded French nationals home from the UAE turned back due to missile fire on Thursday, and a Lufthansa pilot on Friday diverted from Riyadh to Cairo over regional security fears. The head of Lebanon's civil aviation body, Captain Mohammed Aziz, told Reuters that pilots trained in the Middle East have become wearily used to emergencies.
Middle East pilots have always faced crises. So from the start, we trained how to deal with contingencies, emergencies, and everything else.
The escalating conflict in Iran has put those skills to the test quickly. Video footage on March the 5th showed planes taking off from Beirut airport as smoke billowed over buildings in the Lebanese capital. And the risks aren't confined to the Middle East. Since Russia's 2022 invasion of Ukraine, drones have become a key weapon on both sides. Airports in European cities from Stockholm to Munich have faced drone disruptions, suspected, though not confirmed, to be linked to the conflict. Airline captain Christian von der Hey, a commercial aircraft pilot for 15 years and head of the Danish Airline Pilots Association, said he's alarmed by the emerging threat.
Drones are not easily detected, neither from the ground. We can't see them in the air, and they're very small. So sooner or later something will happen.
Drones striking an aircraft's engines could cause total power loss. Damage to the wings could compromise a jet's ability to maneuver. Regular radars used by airports struggle to catch drones. Dedrone is a company that produces counter-drone technology. Data from counter-drone tech firm Dedrone showed there were over 1.2 million drone violations in the US last year. The International Air Transport Association says between 2021 and 2024, jamming and spoofing of planes increased 220%, notably over the Middle East and Eastern Europe. But safety concerns mean airports cannot shoot drones down, and often the only option is to temporarily shut down the airport.
And finally, protests erupted in the United States over the weekend as demonstrators marched in Washington, D.C. and New York City against the ongoing U.S.-Israeli war on Iran. Protesters said the Iranian people should be allowed to determine their own political future and called on the international community to recognize their right to choose their leadership. The demonstrations come as the conflict in West Asia enters its second week, with Israel and Iran continuing to exchange attacks. According to Iran's ambassador to the United Nations, more than 1,330 Iranian civilians have been killed and thousands wounded since the start of the US-Israeli strikes.
Iran does have an alternative. The Iranian nation have fought for democracy for over 120 years. And now is the time to recognize their right to fight the regime and overthrow the regime, but also the right to choose their representatives for the future of Iran.
Here to show lawmakers that real peace and lasting freedom and democracy in the Middle East will not come unless there is regime change, and that regime change must come at the hands of the Iranian people and their organized resistance.
The message to the international community and President Trump is that.
And that's all we have on this edition of Morning Brief at 9. Thank you so much for watching, but news continues right after this very short break on News 9.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। टीम बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers, साथ खड़ा है। We are the Tigers, गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the ball, chuck, there for the ball. Chuck there for the ball. Chuck there for the ball. Chuck there for the ball.
It's confirmed. Iran's Supreme Leader Ayatollah Ali Khamenei has been eliminated. But it was just not about Khamenei. It was also about the entire regime which the Americans wanted to take out.
Are the Iranians going to carry out their pledges, and are they going to continue with their attack?
Though Trump had said that the waves of attack would continue, but a new signal has come that there might be a small pause.
IRGC is likely to adopt lesser radical and more pragmatic approach to basically buy time so that the regime can survive.
There is much more than what is visible or to the naked eye.
Khamenei was killed because uranium enrichment and the Iranian desire to make a bomb.
That expertise is there. People know how to enrich it. There are infrastructure which can again be rebuilt.